So I guess I'll get started. Excuse me, my name is Karsten Arend. I'm president and director of a company called BitRush. We are a publicly traded firm, a blockchain technology company with a payments platform and an online advertising platform. The subject of this panel is basically, let's say, an introduction and the development evolution of cryptocurrencies, and then maybe even some of the blockchain aspects that have come out of cryptocurrencies, as Peter Warwick had basically indicated. So I want to introduce the panel. We'll start off with Amber Scott, who's on your far right. Amber Scott is the founder. Okay, I'll step back. Is it working again, or there we go? Okay, so Amber Scott is the founder and chief AML ninja at Outlier Solutions, which specializes in anti-money laundering and counter-terrorist financing, privacy, process improvement, and the like, with their the U.S.-based partner called Foreign Account Tax Compliance Act Solutions. It's a long name for your partner. What's that? Yeah, it is much fun. Okay, good to know. Actually, furthest over to me is Iliana Oris Valiente, who's a certified blockchain professional, and she's widely credited with being a trailblazer in the space. She was one of the first to recognize the impact of blockchain on so many different industries. She was with Deloitte, where she was a co-founder of Rubik's by Deloitte, a spin-off of that, which I think was Nuco as well, and is now, I'm going to try to get this right, you're the director of blockchain strategy, is it? For
Global Blockchain Innovation Lead at Accenture.
There we go. Global Blockchain Innovation Lead at Accenture. So we're very thrilled to have her here. And then Alan Wunsche is the CEO of and Chief Token Officer of Token Funder. So the subject of ICOs came up earlier, and in this case, there has been a lot of talk about what's legal, what's not legal, and Alan has gone through a lengthy process with the OSC here in Ontario to actually be the first, how would you describe it, Alan, the first legal one or the first sanctioned?
No, we were the first regulatory compliant token offer.
There we go. So we're on the leading edge here, and they're actually doing their ICO as we speak. So I'd love to get an update on that. He is also a co-founder and chair of Blockchain Canada. And today, I think there are at least 4 conferences on blockchain in Toronto alone. So our panelists have other ones to go to as well, and Alan is one of the first ones that has to leave. So we're going to start off with him. He's going to do a brief introduction. So when you get to see him later on, get up and leave. That's the reason why. And then we're going to go into basically a list of questions that I've got. Afterwards, we'll open it up to Q&A for everybody in the audience. Okay, so Alan.
Okay, so what we thought would be hopefully helpful to all of you is to provide some context as to how far we've come, where we came from, and where we are today. So very quickly, we've already heard about Bitcoin, we've heard about some of the concerns about it, but where did it begin? So around the time of the last, the recent global financial crisis in 2008, 2009, while all the banks were concerned about the liquidity crisis, we had a new software technology, an open source technology that was being unleashed on the world. It was an open source technology that was put in place to essentially create a digital form of electronic cash. And there's been over the years, many different attempts at actually making electronic cash work. In this case, a pseudonymous person by the name of Satoshi Nakamoto started, and it was his invention and his white paper that said, we are striving to make an electronic cash that can be transferred peer-to-peer without financial institutions, and that it would also solve the double spend problem. So there's a lot there, and there's a lot of technology behind it. Cryptography technology allows us to basically secure transactions from one person to another, the peer-to-peer aspect of this new cryptocurrency now, because it's cryptography based, from one person to another, and essentially use the technology to ensure that I don't send Karsten and Iliana and Amber multiple copies of this digital coin. So now we have a situation where we can now securely and immutably send money or something of value through this new technology, and allows us to do it in a way that prevents one person from sending multiple copies of the same digital coin, if you will. So that's where Bitcoin started. And Bitcoin was was obviously the moniker being coin, meaning that it was related to digital cash of some sort. And it started really, really small. It was valued at thousands of a cent per Bitcoin when the community was very small, and it gradually gained acceptance as potentially disruptive technology, as a potentially disruptive monetary system. And we today have Bitcoin because of that start. Now we have many other cryptocurrencies in the space. How did we get there? And I think this is always helpful to understand. When Bitcoin was created, it had one purpose, or the Bitcoin technology, this open source technology, had one purpose, and that purpose was to move transactions of this new cryptocurrency from person to person. And that was its single purpose. Then when other technologists came onto the scene, and one of them was a young fellow, Vitalik Buterin, here in Canada, was in Toronto, was at Waterloo for a year, and then dropped out to start this project called Ethereum, which you may have all heard about. So Ethereum started in Toronto, and was literally 2014 that it hit the scene, and publicly available 2015 when this new blockchain, now made available as a public means of transferring value as well. What it delivered to us was an ability to program the blockchain. So now we can program this money with multiple uses and multiple purposes. And that really spawned an entire ecosystem of new potential applications. Now, in the Ethereum case, what we have is this smart contract metaphor, and I'm sure you're going to be talking about it more later. And it's essentially software code that instead of it being a Bitcoin transaction, now we can put software code into this new programmable next generation blockchain, and essentially we can create new currencies or tokens, because we call them tokens to begin with. They may have currency applications, and they may have other applications. But you create this software code, and now the software can basically act like a share registry, a registry of all the token holders of that token, and it has functionality. You put that on the Ethereum blockchain, for example, as one of those programmable blockchains, and now you can create a token that has different applications. Many of these tokens are being called cryptocurrencies as well. So you see how we had this unipurpose Bitcoin. Now we've taken it into the next generation space, and we've now have hundreds of tokens being created, many hundreds, even thousands, frankly, to small communities being created on these new generation blockchains. There are other blockchains, in fact, being created that will have new cryptocurrencies, all with the same basis of the original Bitcoin metaphor of being able to transfer immutably and securely this unit of digital value. So we started there. Where we are today is that, fast forward to today, and the disruptive, the hype is around initial coin offerings, where a token can be placed on the blockchain by a project that is looking for funding, and people like yourselves with Ether can transfer that Ether unit through the blockchain to this project with a smart token, and this new token metaphor, get registered as a token holder, and this project has immediate access to your Ether, which is that digital native currency of the Ethereum blockchain. So what that means is that instead of projects going to venture capital now, they can go more broadly in kind of a crowdfunding mechanism and allow for people to participate. So now we've moved from that Bitcoin, that initial application of Bitcoin only, to now many different versions of Bitcoin, and one of them, that's the second biggest by market cap, so that put it all into context, is Ether today. And that one is the one that powers the Ethereum blockchain and allows for that currency to be, or that token to be transferred. So hopefully that gives us some context to work with, and not diving into the technology per se, but business applications now are numerous. We're seeing the projections of easily 10+% of our world's GDP going on the blockchain in a few short years. So we're moving. This is moving so quickly that most of us in the space are having a hard time even keeping up ourselves. So with that, maybe I'll pass it back over to Karsten.
Certainly. So thank you very much, Alan. I know Iliana has been, where have you been the last 5 days? How many cities?
I did a very quick whirlwind trip to London, UK for a grand total of 48 hours or less, followed by a trip to New York for less than 24 hours, and now I'm back in Toronto.
There you go. So that just gives you an idea of the pace of what's going on in this space. As Peter also mentioned, there's something new happening every single day. And I think we were all talking about the fact we're going to have to check our phones before we get up here, because I'm sure there's going to be some new development literally in the moments before we got up on the panel. So what I'm going to do now is I'm going to start in a couple of questions. And some of them were already touched on by Alan, but let's start with something really basic. What are the strengths of cryptocurrencies and what problems do they solve? So who would like to start with that?
Sure, I can take a crack at this. So I think the reason that Bitcoin appealed to quite a large demographic when it was first introduced, you have to go back and look at the types of people who were initially drawn to this technology. And for the most part, it's safe to say that the crypto-anarchist groups who don't necessarily see the value of traditional third-party intermediaries were the first ones to say, this is a really cool technology, I can now use this to participate in my various video games, you can go buy a pizza with it, and off we go. It's entirely anonymous, and I really appreciate this new technology development. As Bitcoin became more and more mainstream, additional uses of the technology were identified, where as a global citizen, for example, think about every time that you cross over a border and you're worried about whether or not you have enough cash in the foreign currency of the country that you're visiting, and whether your credit cards are potentially going to be accepted, and what happens if you go to a place that's off the beaten path, like Malta. This happened to me, where your credit card provider thinks that your card has been compromised and shuts off access to all of your accounts. But the only way for you to legitimately reopen your accounts is to go to a physical bank. But you're in Malta. How are you supposed to get yourself to a new physical bank, and if you don't have cash in that situation in that local currency, you could potentially be stranded. So the appeal of a global currency that is equally accepted, whether you are in Malta or in Japan, that has recently recognized Bitcoin as a formal means of tender, is pretty impactful.
Yeah, and I think that's an interesting question. I've spent a little bit of time with bankers talking about that, and the question always comes up in the Canadian context. Why do I need Bitcoin? What thing, if I can tap my card to pay for a coffee, if I can make a credit card payment online, if I can do things relatively easily, why do I need that? And I think that there are two parts to that get particularly interesting. Part of it is what you touched on in terms of global and international trade. We've done some experiments just within my own firm because we have a UK office, we have a New York office, and can we sell more quickly, more effectively using Bitcoin when we have projects that involve each of those three offices because they're separate entities than we can through the banking system? Yes. It's not, it's not instantaneous, but so far it's proven to be faster, more efficient, more traceable, more effective as soon as you're dealing with those international counterparties. The other piece about it that I think is just sexy as a human is financial sovereignty. So the idea that if I want access to my Bitcoin, I have that. And there's not a step in between me and that other than simply my private keys, my passwords, whatever security it is that I've set up. I hold those at any given point in time. I'm not worried about the failure of any other institution. I'm not worried about any other institution or individual being able to require that I pay them any fractions of those Bitcoins to store them for me. I'm capable of doing that on my own. And there's no cost to me to do that. I'm of course exposed to any price fluctuation and anything like that because I'm holding the coins. But I am truly responsible for that. And that of course comes with some of the features that I think are really scary to some people, and Peter alluded to this earlier. A Bitcoin transaction is permanent. And as Alpha had mentioned, the ownership of the Bitcoin is reliant on those keys and on those passwords as opposed to generally something physical. So if I give Iliana my private key, whose Bitcoin is it?
Depends on how nice I am. And how much fear she has instilled in me.
So I do think that there are these beautiful problems, just even in that basic currency way that Bitcoin solves. Beyond that, I think the technology in general has incredible implications. And I probably went to about 4 or 5 Ethereum talks in the very early days, before I heard Vitalik say that he watched a lot of people focus on the idea that you could decentralize everything. And they were spending 90% of their time trying to figure out how to decentralize. And 10% of their time trying to figure out whatever the thing is they wanted to build. So, be it a decentralized bank or a decentralized Uber, or decentralized whatever it was, if I'm spending only 10% of my time trying to build the actual value that I want to build, that's pretty silly and I'm probably going to fail. And what he wanted to build was essentially a toolbox to let people build things in a decentralized way. That's the piece of that I think is brilliant in developing. I think the first iteration of that we're seeing is really these tokens, but I think that there's incredible potential beyond that. And I think that I have no idea what problems it will solve 10 years from now.
So if we also think about the global context, and we have a pretty secure, functioning financial payment system in Canada. In other places in the world, and we always think about the underdeveloped or the less developed economies around the world, where people there are not banked. They don't have an account at a bank, but they can open up a wallet. They can open up a mobile device, load up the Bitcoin blockchain wallet of their choice, or an Ethereum wallet, or any wallet like that in the future, and immediately be able to transact and move these tokens of value. And again, if we just stay with Bitcoin for a second, but clearly it's a bigger story than Bitcoin. Let's just stay with that one. Somebody can Amber, we can send a Bitcoin to anyone to their mobile device in Africa, and then they can start moving it amongst themselves as a method of payment without having interacted with any financial institution, because it's the broader network, this decentralized network, that is managing the payments network for them. So you're using this common good now, this public blockchain that is a worldwide common good, and bringing people all over the world that could not get bank accounts before into a payment system and into a value transfer system in which they can now participate. And that's the broader picture that we don't necessarily buy our groceries here, but others do now, and others do transact in these digital currencies all around the world.
One thing to notice though is we spent a lot of time talking about Bitcoin and individuals,
This is now being adopted by enterprise users, right? And so in my day job at Accenture, I primarily work with large corporations who are looking at using the underlying blockchain infrastructure to simplify their own back office processes, cost savings, new revenue opportunities, etc. But even when you think about Bitcoin, just 2 or 3 weeks ago, I was chatting to the CIO of Procter & Gamble, and Procter & Gamble has discovered that one of their top use cases of blockchain is Bitcoin, to move money out of some parts of the world where there are capital controls. I believe the example he was using was Nigeria, and to be able to convert the funds back from Bitcoin to fiat and move it around the world. Simple, but also very effective.
Yeah, absolutely. And so it's, I think if I get the numbers right, their previous cost was around 20%, and they dropped it down to low single digits with regards to actually being able to take the funds out of that country and then convert them back into fiat somewhere else. So now we've spoken about some of the benefits. So now let's look at some of the weaknesses of cryptocurrencies. Amber touched on one of them, and some of the problems that come up with that.
I think one of the things that we've sort of been talking about is that code doesn't care who you are. And there's immense beauty in that. So there's this immense financial inclusion beauty in that it doesn't matter if I'm young or old, black or white, man or woman, I can transact. The issues that we deal with that is that it does make it a little bit easier to circumvent any of the controls that exist in our traditional financial system. So code also doesn't care if I'm a terrorist. Code doesn't care if I intend to commit a crime. It doesn't care if the material that I'm buying using those tokens are in fact a crime. And that's where I think it gets particularly interesting in terms of the arguments and how we deal with this, especially from an AML perspective. One of the things that always hits me right in the heart when I hear law enforcement on stage is that we always hear, we need more money, we need more resources. I would love to see a world in which it is equally attractive for a talented young programmer or forensic accountant coming out of school to work for the RCMP as it is to see them working for Google or Deloitte.
Yeah, on that note, I'll add something as well. I know maybe about a year and a half ago, Iliana and I were talking about developing something for the firm that I'm at to basically audit blockchain transactions. And Peter, you mentioned a firm that does that already. So eventually you can see a world where you're going to have a lot of things on blockchain, and then pretty much every transaction will be of the public ledgers or private ledgers where various regulators would have access to. All that information would be available and it would be immutable. So it would be a wonderful way to actually track pretty much everything. But there are cryptocurrencies out there that are designed to basically make sure that that isn't going to happen, and they care more about privacy. So we're very early days in this space, and it's going to be interesting because right now the existing regulations being applied, and I think there's going to be some new regulation that's going to have to come out with regards to definitions and the like. And what is a cryptocurrency? What's a utility token? What's a security token? These are sorts of things that the people up here on this panel have been dealing with recently, and we'll touch on that in a bit. So next question would be, how well accepted are cryptocurrencies in commerce, and what are the trends? I'd like to touch on that one.
It's still not as widely accepted, of course, as going to your local coffee shop and buying a coffee using cash. But we are seeing predominantly online digital transactions where Bitcoin and other cryptocurrencies make a lot more sense, rather than trying to undertake a microtransaction where you're sending somebody $5 using the traditional Visa network, or trying to do a wire transfer where the value of the money being moved versus the fees that you're paying to move that money are not exactly proportionate. We are starting to see higher adoption, mostly outside of Canada, because as Amber mentioned, here we have no shortage of payment options. I open my wallet and I have multiple credit cards, multiple debit cards, having learned from the example of you should never rely on just one FI in the event that you are ever locked out of your accounts. We're starting to see the proliferation of more Bitcoin ATMs. That was mentioned in one of the talks earlier. That increases the access points for people to convert fiat currencies into digital currencies as well.
All right. Now, this would probably be a question somewhat directed towards Amber, because Amber works KYC, AML issues for exchanges and the like, startups here in Canada and elsewhere. So how are cryptocurrencies converted and exchanged into fiat, like the US dollar, Canadian dollar? What options do people have? And for example, what sort of things are being put in place in the space with regards to KYC, AML?
Sure. So the thing that I'll say about that usually surprises people is that there is a lot of voluntary compliance in the space. So there are a lot of people that are out there. We don't have regulation from an anti-money laundering, counter-terrorist financing perspective that says if I'm buying and selling Bitcoin, I'm covered under this regulation. In 2014, Bill C-31 passed, and that said eventually dealers in digital currency, not yet defined, we're going to be, and still not defined by the way, we're going to be regulated as money service businesses. We don't have regulation enacted that enables that yet. We might see something next year, we'll see. And so in the meantime, folks have been looking at what do they do. Banks have in many ways, so the few and far between banks that are banking these types of businesses have become de facto regulators, where the banks are saying, in order for us to deal with you, you have to show us that you have policies and procedures, you have to show us that you have a risk assessment, you have to show us that you're doing KYC. We want to see your documents the same way that we would if you were a regulated entity. But businesses in the space were doing it long before then. I think there's a strong degree of know your customer, of KYC that's happening. One of the things that I actually think is really cool is that these businesses right now, because they're not regulated, aren't shackled in the same way as traditional financial institutions and as regulated entities in terms of how they're required to identify someone. And so they don't need to follow these very prescriptive regulations that mean that you can look at someone with 3 years Canadian credit history and then that's it, they're identified as long as you can match your name and address and date of birth, or you can verify 2 or 3 pieces of specific information, so name, date of birth, name and address, or that they have an account with a Canadian financial institution. So they're looking at these much more technologically advanced, and in many cases, in my opinion, just far better risk mitigation measures. The measures that they have in place, they're looking at in terms of how well do we believe that we actually know this person? How well is it preventing fraud from occurring? And anecdotally, one of my clients in that space said, okay, I'm going to just try to put in the new identification measures and see what happens to my fraud rates as an experiment. I'm going to take out the other guardrails for this 2-week period and watch what happens. And his fraud rates were exponential in comparison to what he'd been doing from a risk-based perspective. So I actually think there's wonderful things that are happening in this space. There are also, certainly folks that are taking advantage of the opportunity to not have to do anything. But the most common question that we get is, I want to open an exchange, I want to open a Bitcoin ATM. What am I required to do? And what should I, and the answer is you don't have a lot of requirements other than simply don't lie to people, be honest to people, tell them what you're actually selling, tell them the rate, those basic consumer protection things. But you don't have AML KYC responsibilities. And people are saying, okay, but so then what should I be doing? What do I want to be doing? What level of ID makes sense? And they're great conversations.
These are huge questions right now, and Amber, you've hit the key ones. These digital exchanges they're now we're in a new level of trust, because they're essentially, speaking of them specifically, they're on-ramps and off-ramps to this new digital currency world. So how it works, just practically speaking, is I can wire some money from my bank to a new form of these digital exchanges, and they're called Quadriga and CoinSquare and Poloniex and Kraken, and these are new financial intermediaries in a sense, right? Because what I do is I take my fiat, move it into a digital exchange, and then place an order for some cryptocurrency for someone else that wants to sell it to me in their trading platform. So essentially, they become a custodian of my money. They become a custodian maybe of my Bitcoin at the time that they have it. And this is an unregulated space right now. It is very, very interesting. So you move from a very a trusted peer-to-peer world where we securely, I send to Peter a Bitcoin, I know that he's got it perfectly. Now I have to trust an intermediary and their practices, and frankly, that their accessibility, their interface, their website, it needs to be up so that I can interact with them. But folks, there's those digital exchanges, such as Coinbase, who happens to be a big one, it's declared that they're getting 100,000 new subscribers to their service on a daily basis. The demand is exploding in this area. People are apparently moving their fiat into these digital exchanges, buying cryptocurrencies, and then selling, doing their transactions there. Again, back to the regulated, there's a new level of education and awareness that has to happen here. I think some of the digital exchanges are doing a pretty good job, and others just say, you're kind of playing at your own risk here.
From the perspective of what's relevant to this audience here today, when we talk about these new classes of intermediaries that have appeared and that are doing the KYC and the AML on a voluntary basis, one of the criticisms often levied against the Bitcoin space is that people can transact in an anonymous way, and from a law enforcement standpoint, how would you track down malicious actors? Well, it's not actually accurate to consider the Bitcoin blockchain transactions to be fully anonymous. Instead, they are synonymous, which means that if most people enter into the ecosystem via one of these on-ramps or one of these off-ramps, there is a record with an intermediary institution that generally knows who you are. The only way that you could be an undetected actor in this ecosystem is if you've never interfaced with Bitcoin ATM, you've never interfaced with an exchange, and you've only ever done pure peer-to-peer transactions, and probably with people that you don't even know. And that's the only way that you would have Bitcoins in your account without a trace or a connectivity into your own digital identities. So from a law enforcement standpoint, now you actually have a trail of breadcrumbs that every transaction leaves behind the ability to potentially run analytics on it to identify malicious actors.
And on that point, just to follow up with follow on from Iliana's comment, there's actually a really interesting TED talk from an agent by the name of Catherine Hahn, which some of you may have seen, and it's how they captured in the United States the people who are running the Silk Road website. So by all means, look at that. It's fascinating because, in fact, there were 2 federal agents involved that were skimming money off of it, and they were trying to, basically keep the investigation from being successful. And it was because of the blockchain, because of the immutability of the ledger, because you couldn't hide it, they actually got caught. It's fascinating. So look that one up. Now the next one would be, what has been the reaction of state actors to cryptocurrencies?
I think here we've been really lucky. We had a Senate report come out that chiefly was called Can't Flip This Coin, specifically that looked at Bitcoin, and that report recommended taking a very light touch approach. So far we haven't seen new regulation. We have seen the application of existing regulation. And I think this is something where we have a lot of misnomers, even in terms of the US, where people are saying, they're regulating this, they're looking at it in a new way, but really it's looking at, does existing law apply, when does it apply, how does it apply? The only real example that I can think of a specific new law is the New York bid license, which I think is a disaster. We've seen so many businesses that are wonderful and thriving and doing incredibly across the US. They're just looking at New York. We'll operate in a big donut shape all around it, but New York itself, we won't deal because it costs over $1 million to get one of these licenses, and that's just not feasible for most folks that are in the startup world. From a Canadian perspective, we haven't seen any new laws yet, other than the bill that I mentioned earlier, which has no corresponding regulation yet. We have seen interesting application of securities law. And I think that's probably, do you want to address that one, Alan?
Yeah, well,
All right.
I'd be happy to.
There we go. Over to you.
So the securities laws and regulations are exactly what have been my focus over the past year. Okay, so state actors is the big phrase in this question. Now, if you specifically think about the SEC, the Ontario Securities Commission, and their views on, are you transacting in financial instruments? And if you are, then do you fall within our existing securities regulations? As it turns out, many of these tokens that have this they have this test to determine if your token is a utility token or whether the token is more alike a financial instrument in which you are investing and expecting a return on your investment. And that could be speculative, it could be profit dividend kind of like. And many of these tokens around the world that are being described as cryptocurrencies and not securities by their projects will in fact, by all accounts very recently, will be in fact deemed to be securities under existing securities regulations. So we're getting a catch-up of our regulatory environment to all the innovation, if you will, and all of the advancements of projects and these fantastically new and novel funding mechanisms, which have been in kind of some uncertainty as to how do they fall within our existing regime or not. We've had different reactions around the world. China has banned the initial coin offering. South Korea did as well. They saw it as getting out of control. We have the SEC has declared that one of the big name examples was called the Dow token, which retrospectively was deemed to be a security. So there's definitely the ability for these regulators to go back in time and retrospectively deem that whatever the reality is. Here in Canada, we've been in that situation where the Canadian regulators and the Ontario Securities Commission is the one that I'm most familiar with, have said, there are times when where your project, your token could indeed be a utility token, but we're not going to tell you exactly what those times are, and come and talk to us. So we're in a situation of the regulators being very open, and I've been privileged to have worked with the Ontario Securities Commission Launchpad to develop essentially a model and a framework that allows us to experiment with this. And on that note, so the Ontario Securities Commission has said they're willing to grant certain exemptions from the existing regulatory framework as long as it's experimental, as long as it's within a sandbox, and that's what my startup Token Funder has is specific exemptions such that we can take experimental steps. But I mean, we're taking small steps in the right direction. And by the way, think of the difference between us and many projects around the world that can work completely anonymously, and they say we set up in Gibraltar or Switzerland or Barbados. Click the box and send us as much of your ether as you want. There's no KYC there. They have no idea, because they don't know who you are, whether you've mortgaged your entire house to sell, send them everything you possibly own. Our government and our regulatory bodies have a problem with that, obviously, because we're very concerned about investor protections. So we have a healthy capital market here. We know that it's not perfect. But on the other hand, you don't throw it all out and say, let the Wild West reign, because a lot of investors could get damaged or hurt. So that's not a good thing. And we have to do KYC in our business in order to transact, even if you're going to send us Ether, which we're accepting Ether and CAD to support our project. But when you send us both, we need to do KYC that we actually know that this is a suitable investment for you. I'll have the wealth symbols and Borrowells and such that work online. So, our regulators here are very progressive. Some of the blockchain community might think not, But having those internal discussions, I know that they are thinking progressively. I just want to do it in the right way. Just want to make sure that our investors ultimately aren't hurt and the Canadian public is protected in the appropriate way.
Yeah.
So that's that. And on that note, I think I have to leave.
Yes,
you were going to remind me. Thank you so much for having me here. Really appreciate sharing what little we've been able to.
Yeah, thank you very much, Alan. So following on to that, what would good policy regulation around cryptocurrencies, ICOs look like?
One of the things that's very important in this space from a regulatory standpoint is a better understanding of what it is you're regulating in the first place. The reaction initially when I started to get really involved in the crypto space on a full-time basis back in 2014 from most of the regulatory agencies I spoke with was, what is this Bitcoin thing? And what does it mean? And how do I even think about it? And luckily in Canada, there has been this willingness to listen and to engage. Later on, I think it's in December, I'll be in Ottawa presenting at the Federal Commission of Regulators with all 29 of the federal regulatory agencies in the same place under one roof, listening and trying to learn more about blockchain and separating it into smaller workshops to do a deep dive. And what we've seen is jurisdictions that don't necessarily spend the time are the ones that introduce things like the BID license. And to share a personal anecdote, I remember when the BID license came out and I printed it out, and it was a 10 or 15 page document. And I sat there with a highlighter and I highlighted every aspect of this document's requirements where I, as a consulting services provider and a recovering CPA, might be able to provide services for the various companies that would have to comply with these regulations. And so I'm sitting and I'm reading and I'm highlighting away, and I finish this document and I'm happy and I'm thinking to myself, great, this is a new service offering opportunity. And then I paused and I went back to the notes and I realized, wait a second, something is wrong with this scenario because I've highlighted the majority of this document. This is a law of compliance. Who is this geared towards? It's geared towards startups. There is no startup out there that is at the early stages of figuring out their business model or whether they have product market fit or not that has the bandwidth to go and pay a major consultancy firm or an audit firm what is required in order to qualify to operate in the state of New York. And so now you have these companies that operate everywhere in the world, and they will say, you cannot use our service if you are a resident of Zimbabwe, or if you're a resident of Iran, North Korea, or the state of New York, which I think defeats the purpose of what good regulation would ultimately look like. To Amber's point earlier, I suspect that much of the regulation that we already have in place is a very good starting point for the blockchain world, so long as we're taking the regulations as they were meant to be in spirit, and then figuring out how the relevance applies. So if we're looking at token offerings and the investor suitability, that's important. If we're looking at KYC, it's, well, what is the intention behind it? What are we trying to prevent? And how does KYC work in an environment that's far more decentralized than you would have if you were going to just one FI that has the information for all the various stakeholders?
I think one of the things fundamentally that we have to recognize is that the nature of technology is global. And the nature of regulation as it occurs right now is local. And I understand that we have, in a sense, they're edicts. So you have the recommendations that are passed down from the Financial Action Task Force. And we all do our best to implement those in the ways that we can as countries, as financial institutions that are then following the regulations of our countries as various types of reporting entities. And so we end up with this mishmash of ways of doing things that doesn't necessarily work well across borders. Ultimately, what I would love to see is for membership in that club mean something more than just our countries can trade together. I would like to see more streamlined, more international ways of doing things. I would like there to be a way that I could do KYC simply and electronically for a person that was non-Canadian. I think that's going to be incredibly important for our businesses to thrive, for innovation to thrive in the long term, not just in Canada, but everywhere. I think that we need to have things that are risk-based. So we need to really understand what risks are we controlling for And we need to have things that have effectiveness testing associated with them. And if the former isn't true, but the latter is, that was a ridiculous rule, and I need to do something else. So we really need to understand the impact of the policy that we put in place. We need measures that deal with that. Ultimately, I think that we also need less mass surveillance and more targeted investigation, more resources for police departments to be able to conduct the long-term, intense investigations that are involved in understanding financial crime, that are involved in understanding technology crime, and less really emphasis on let's get some guns and cash on the table, because there you're hitting the lowest level of any of these organizations. You're not really effective in tackling a macro level problem. And we're not resourced to tackle the macro level problem at any level right now.
So this was also touched on by Peter Ward, but I'll bring this up again. What has been the reaction of the banking system to both cryptocurrencies and cryptocurrency startups?
When I first started talking to the various banks in 2014, they all took meetings with me. But the meetings were always with someone involved in the risk side of things or the compliance side of things, and always based under the condition of anonymity, because no one bank wanted to hit the front page of the Globe and Mail or the Toronto Star as bank so-and-so is exploring Bitcoin or blockchain because it's risky and we don't know what the market reaction to that is going to be. The FS world was the first one to recognize that perhaps there was something meaningful with the introduction of Bitcoin because there's a direct relevance, correlation between digital money that is borderless and doesn't require FIs versus money as we currently have issued by the central government that flows through our coffers. And because of that initial threat, banks started to pay attention. Over the past couple of years, we've seen a shift where they're no longer looking at Bitcoin and cryptocurrencies as a threat, but rather as a new type of asset class, many of which are also making investments in this new asset class, JP Morgan style and a number of others. And when it comes to the cryptocurrency startups, there's been a bit of a discrepancy between the bank's willingness to embrace blockchain, the bank's diminishing the use of the term Bitcoin, where they're now all very interested in the underlying TLT applications, and their willingness to accept cryptocurrency-based companies into their portfolio because, once again, from a risk standpoint, they're not sure what to do with them. So I remember instances of a Bitcoin exchange that was based in Canada that couldn't find a banking partner for the life of them. They found one based in Western Canada, and they were paying $25,000 a month to have a basic business bank account because none of the tier 1 banks felt that they had enough guidance around what they could and could not do without being offside from their own regulations, which is crazy when you think about a small business trying to get up and off the ground. And even for myself, I run a nonprofit research and development hub focused on the core technical research topics in the blockchain space called CollidRX. We are not doing anything with the cryptocurrency side of things. We really are home for PhD students in pure mathematics and distributed systems to go and write academic papers and get funded. But in our registered business name, it's CollidRX Blockchain Research and Development Hub. And I have an account with one of the tier 1 banks. I'm a chartered accountant, I'm a respectable human being. And I ended up getting a call from my banker saying, oh, by the way, your business name triggered a flag in our system, and luckily my banker understands what it is that you do. And he was able to explain away to their compliance people that no, they're not doing anything remotely risky, and it's fine for them to continue to have an account with us. But we've seen instances of a number of companies that are very well backed, have valuations in the hundreds of millions of dollars, have former chairpeople from securities commissions that are sitting on their board of directors who've lost banking accounts in Canada because one of the tier 1 banks has said, no, we no longer want to bank you, which automatically means that those companies are no longer servicing the Canadian market.
Yeah, that's not just a Canadian crisis, that's a global crisis, but it is a real crisis. Andreas Antonopoulos, if you haven't followed down that rabbit hole yet, look up his stuff, he's fantastic. But he does a really great talk where he talks about how blockchain is Bitcoin in a suit. And I think that's really fascinating in that we always joke that when it comes to banking, Bitcoin is like Fight Club. And the first rule is that you don't talk about it. You can talk about all of the wonderful things that Bitcoin does. You can talk about a medium of exchange. You can talk about a store of value. You can describe it as distributed ledger technology. And that's all fine. But if you say the word Bitcoin in Canada, odds are slim to none that you will establish a bank account with any Canadian financial institution. I heard someone sit on stage last week and say, well, we don't allow Bitcoins to go through our accounts at our bank. And I can't even technologically figure out how the heck that would be possible. So please come and see me if you don't, because I'm baffled by that. But there's a lot of misperception about it. There are a lot of companies that are transacting in ways that aren't particularly transparent with the bank, because you're not going to stop existing as a company because someone will bank you. And I think that's the biggest point of tension in our banking system. We see at the same time that there's a lot of investment in technology. There's a lot of interest in technology. It's not necessarily interest in Bitcoin. It's interest in blockchain. It's interest in distributed ledger technology. It's interested in a rose by any other name, if you will. And that's there, I think, at every level of our financial institutions. It's there at every level of companies that are interested in investment. So it's really a fascinating dichotomy. My hope is that from a regulatory perspective, and I think this to me comes back to what does good policy look like, we have regulators that encourage banks to bank businesses that they perceive as being potentially good. I'm certainly of the opinion that if your business is something other than committing crime, you should probably be able to have a bank account. That shouldn't be your biggest barrier to innovation.
All right, so now to get on to something that might appeal directly to the law enforcement group here. What notable developments have we seen in terms of law enforcement, subpoenas issued, analytics applied to trace anti-money laundering, alerts issued to the general public, etc.?
Well, interestingly enough, the IRS, who has been sitting on the sidelines of this entire Bitcoin growth, has subpoenaed one of the largest exchanges, Coinbase, for a list of all of their end users. And the rationale, one of the rationales from the IRS is that only 900 people or so have reportedly filed tax returns to the IRS, or they have acknowledged that they have capital gains or losses from the use of Bitcoin and cryptocurrencies, which the IRS thought is inconsistent with the fact that Coinbase is signing up, upwards of 100,000 users on a daily basis and has quite a wide usage base right this moment. So a couple of things that could be the case: either no one is exchanging their Bitcoin back into fiat once they're in the ecosystem and they're holders for a little bit the term goes, and therefore they don't actually have anything that would be a traditional capital gain. But then there's also the concern from the business side of things. If you were Coinbase, do you want to disclose all of your user lists to the IRS? Because what is there as far as privacy protection mechanisms for your end clients, and where is this list ultimately going to end up? So that's one interesting approach that seems sort of to play out.
Do you see that as, just curiously, do you see that as being fundamentally different from the CRA request for PayPal data from their business users?
It's not too dissimilar.
I think the one difference is that you're saying it's business users versus individuals, which I think is certainly a little bit different. Then let's wrap this up soon. What does the future hold for cryptocurrencies and blockchain?
From a cryptocurrency standpoint, I wouldn't be surprised if the number of individuals using it continues to grow, especially outside of the North American or the developed markets. If you're sitting in a country like Venezuela and you're dealing with a 700% inflation rate, there are reports of people who are only able to survive by being able to convert whatever is left of their fiat currencies into cryptocurrencies and moving back towards that barter economy, recognizing that their nation state-backed currency has limited usage. We're also starting to see a lot of interest from central banks around the world looking at how can they adopt or potentially issue a state-backed digital currency that provides users with all of the benefits that something like Bitcoin offers, but with some additional protection mechanisms in place. So for example, how many of you in this room have used the link that says, I've forgotten my password in the past, I don't know, like month? Yeah, that doesn't exist with Bitcoin, and that's one of the challenges that's going to be faced by that ecosystem that could potentially limit adoption. Because for those who are not technologically savvy, it's absolutely frightening to think that you control the keys to your house and you also control the keys to all of your private wealth, and there is no mechanism of recourse. So that's what I think we'll start to see on the cryptocurrency side of things, but there's also a tremendous amount of interest in the underlying blockchain technology, and we're seeing applications of it used in traditional exchanges. We're seeing applications of it throughout the wealth management space and the banking world. We're seeing applications of it in the government, where we have all of these agencies that have information that don't necessarily transfer that information around amongst their various users. And we're also seeing a ton of applications in the supply chain space, where you think about a car, and if there's ever a recall, how do you identify which car has a specific component that made its way into the final configuration, and what happens once you've sold that car from the original point of purchase to the seller to an individual who are reselling the car to Karsten, and how do we enable that traceability, whether it's car tires or whether it's the food that's on your plate, and you ensure that if there is an outbreak of E. coli, that you're able to identify where in the supply chain that may have entered in for additional traceability and visibility. So I think the enterprise side of things will continue to grow as companies move beyond early stage experiments and proof of concepts into more robust pilots and ultimately into production readiness with integration into existing systems.
I think on-off ramps will eventually cease to matter. So I think this is, and I don't mean completely, those will always exist in some measurable way, but I think that we'll see more situations where people are getting paid in Bitcoin. I see this within our own company where we'll get paid for certain projects in Bitcoin. And when we do, I ask my staff, do you want to receive fiat currency or do you want to receive Bitcoin related to this project? So far, the answer has been Bitcoin 100% of the time. If they can then take that Bitcoin and send it to Albany, a token funder, and invest in a number of other underlying assets, if they can take that and buy a car, that becomes a very different system where you're not looking at simply those intermediaries and being the points where you need to think about risk. And from a policy perspective, I think that means we need to think about things differently. Fortunately, there are absolutely beautiful network modeling tools that exist already. So two of the companies that I'm aware of are Chainalysis and Blockchain Intelligence, and they're both doing phenomenal work in that space. I think there's something incredibly wonderful about the idea of an immutable public ledger in terms of having that as a source of information. I think that's going to become a phenomenal anti-corruption tool. And like we saw in the Silk Road case, where we had a number of corrupt law enforcement officers that were trying to steal Bitcoin, that becomes a pretty damning piece of evidence in those scenarios. But as the gentleman over here had raised, once we start looking at other pieces of data being attached to those blockchains, in particular when you're talking about pieces of personal information, and right now that it's expensive and it's ineffective to attach a lot of personal information to a blockchain, I think we will have a number of things that we need to sort through from a privacy perspective. There are some beautiful technologies being developed, including certain groups that can do wonderful things in terms of revealing limited amounts of information to certain parties at specific times. Very early stages for all of these things, but I think very cool things will come from that.
So I'll just finish off with 2 quick points. One example is a company in Germany, a startup. I was speaking with Anthony Fury, who's going to be coming up later on today on his radio show this morning. And I brought up this example. So how many of you have ever had a flight delayed? How many of you have ever had it delayed for several hours? How about canceled? We can all say that. Okay. So this startup, because of the blockchain and because of smart contracts, which we touched on, is actually such that you can go to your app with them and you can buy insurance for your flight. And if your flight is delayed by 5 minutes, before you even know it, before it's even posted, you get a deposit in Bitcoin. So the policy pays out instantly. There's no human beings involved. It just takes information from an oracle, namely the flight information. It deems that as being true. It instantly pays it out to you. And if it's then canceled, you get a bigger payout, et cetera, et cetera. There's no human beings. It's not going to take weeks or months or some claim adjuster to take a look at it and so on. So here's an entire business that next time I fly, I'm using it. You couldn't do it without blockchain. It wouldn't even exist because of the efficiencies of the technology. So it doesn't matter where you are in the world, boom, you get your Bitcoin. It doesn't matter which flight, which airline, which airport, whatever, boom, it just happens. So there's things around crop insurance, all sorts of other great tools and methodologies that blockchain will be able to do to basically offer entirely new things in various different industries. And just to give you an idea of what we were doing with our firm, we have a payments platform. The idea is not just that you can send cryptocurrencies worldwide, but the idea is that you can send fiat currencies worldwide. The system's designed to be able to clear those fiat currencies and exchange them from one currency to another currency in like 2 or 3 seconds. So when you get send here and you're sending Canada over to Europe, they'll get it in 2 or 3 seconds, and it's in euros, and it's cleared, and you can use it instantly. So those are the sorts of things that blockchain technology will allow, and as everybody on the panel has stated, we think it's going to have quite a big impact.